YouTube, this is the Working Investor. This video is an analysis of different Bitcoin proxies that all correlate with the price of Bitcoin, but they're all similar but different. And these are specifically income-based proxies. Two of them are Coinbase and MicroStrategy. Of course, I'm looking into CONY and MSTY, but you have to track what they represent, and they represent Coinbase and MicroStrategy. And we're going to look at the chart over here. We're going out to the 1-year chart, or actually 6-month chart is even better, because we're also going to be comparing BITO or BITO, BITO, which is a futures contract on Bitcoin, and they basically roll out month to month. And we're also going to be comparing BITX, which is a double leveraged Bitcoin ETF. And I was thinking to myself that the double leveraged Bitcoin ETF is just like, if you're a perma bull in Bitcoin and you want to have a long-term play, I was thinking to myself that, BITX, which is double leveraged Bitcoin, that reminds me of MSTY, which is MicroStrategy, and that seems like Bitcoin amplified, because they do, they take loans out and buy Bitcoin. So that also seems like a leverage play. But if you look at the chart, you see here the blue is MicroStrategy, the dark blue is MicroStrategy, the light blue is Coinbase, and then the red is the 2x, BITX, the double leverage, Bitcoin ETF, and then the yellow is ProShares, which is basically BITO. It's their futures. And you could see here, on first glance, you think to yourself, wow, like MicroStrategy obviously surprised me, because it seems like it has a larger magnitude of momentum. See, they all correlate with the price of Bitcoin. They all mostly move up and down with the price of Bitcoin, except maybe sometimes Coinbase has other variables, because they're going through some, it looks like they're going through some lawsuits, SEC lawsuits. So that could be tampering with the price a little bit. But you see, they all kind of correlate, but they all move in different magnitudes. And I was thinking to myself, and again, this is not financial advice, if somebody's a perma bull and they want to capture a strong play in Bitcoin with momentum, with price action, I was comparing MSTY, MicroStrategy, MSTR, and AKA its derivative, which is MSTY, which is income play on Bitcoin. And I was comparing that, let's say, with the BITX. People don't realize that BITX also pays out a dividend. You could see that they do pay, it looks like, about a almost 25% dividend yield. They only have about 5 payments that they've made so far. So time will tell how, because you could obviously see the payments do fluctuate, and time will tell like what's going to be the total, return of it. Also, of course, BITO, like, even though it seems like on first glance that BITO seems like it's not, it comes short when it comes to the price action of Bitcoin. But that's only part of the picture. You could see here that BITO has been paying, let's say, $1.09 this past month, $1.20. They've even paid here back in June $1.76. Now, that's incredible. Like, when you're talking about, there's, roughly 70% of the yield comes from the distribution. So when you see the price action, that's not factoring in another 70% bump of price action that's factored in, that you're getting paid out as you go along. So you have to put the income from BITO and BITX. You have to calculate that to give you the adjusted momentum. So you can't always say, it's not really an apples for apples comparison. And then you could also, if you type in here BTC, obviously, like, you want to get the baseline Bitcoin to US dollar. Well, I just messed everything up, but you can just compare that to MSTR. You could see, obviously, like, and compare that to. So here I have everything plugged in. So you can see the purple is the Bitcoin to US dollar, the raw price. So you can see here going back 6 months. If you want to go back a year, you could obviously see some kind of trend line that, MicroStrategy moves in greater magnitude than the price of Bitcoin. So historically, again, past performance is not indicative of future gains. So yeah, so these are different Bitcoin proxies, some leverage proxies, some, BITO being a future, MicroStrategy, BITX being the leverage products, and then Coin being the Coinbase products. Just for fun, I'm going to plug in just MSTY, CONY, BITX, and also BITO. And also one more thing to factor in is that BITX has really, really good premium out there. So people who, myself, if I were to hold, and I do have some plays on BITX, it's not just an income play or holding play. It's more like a option play to do some options on it. And that has to also be factored in. And it's very hard to calculate because it's a very personal preference depending on your delta, your strike prices, your cost basis. But let me plug in the rest of the stuff, only the income funds, and I'll show you in a second. So this is just a price action component. So you could see here, like, let's say if you go over the past year, or should I say 6 months, because they've all been out around at least 5 months, about 5 months. You could see here that, the dark blue is the MSTY, that's MSTY. And you could see these are the moves. And then the red is the BITX, the green is the BITO, and the yellow is CONY. So you could see here how they've moved, but it's really, really not the full picture. This is just the price of the underlyings itself. It does not include like an enormous component, which is the dividends that has been derived over the past year, which I hear that some of them may have already paid 100% of their dividends already. And for the BITX, it doesn't come into calculation its dividends, and it doesn't come into calculation its options that you could play on it. And people also play options on BITO. As a matter of fact, there are like 2 ETFs that I know of that just do options on BITO itself. So it doesn't take all the variables into consideration. What I wanted to point out is that there are a lot of Bitcoin proxies out there. More specifically, there are a lot of Bitcoin income-based products that are proxies to Bitcoin. They may move in correlation to the price of Bitcoin, and they derive, you can get dividends based on the implied volatility and momentum of Bitcoin. So there are a lot of things to consider. They all seem to correlate if Bitcoin goes up, and they seem to go down in general if Bitcoin goes down. So just put that in mind. So if somebody has, let's say, a lot of holdings, just to think through how much holdings, even though you have a lot of different products, they're similar but different. They're similar because they all correlate with Bitcoin, but they're a little bit of a different, slightly different twist, entity, leverage, other company proceedings. As far as a risk profile, just something to bear in mind. Again, not financial advice, just wanted to open your mind about different products and how you can compare and contrast between them, and just to get you thinking more about these products and your exposure to it. Anyways, this is the Working Investor over and out. I hope you guys have a wonderful evening.